As we expected, trading volumes were low during the week ahead of the New Year holidays. Despite cautious trading, there were still signs of the so-called Santa Claus rally as the US stock market closed the week with gains. Find out more about the sentiment in the foreign exchange, commodities and crypto markets in our video review. The US dollar index, which measures its value against the basket of 6 major currencies, closed the year near the 1.5-month low at the level of 96. This happened because risk sentiment improved as coronavirus fears had slightly eased worldwide. However, the outlook for the US dollar remains mostly bullish amid the hawkish stance of the US Federal Reserve. This Wednesday, markets will be waiting for the release of the FOMC minutes, which will state the final decision on scaling back the quantitative easing program as soon as this March. In addition, the Fed will confirm its plans to raise the interest rate 3 times this year. Meanwhile, the euro managed to win back some of its losses against a weaker dollar amid the risk on sentiment in the market. The euro-dollar pair advanced to the level of 1.1380 by the end of the previous trading week. Yet the overall dynamic of the pair was largely negative over the year. As a result, the quotes declined by 7.5% in 2021 amid concerns of a slow economic recovery in Europe, high inflation, and the risk of new coronavirus restrictions. In addition to this, the European Central Bank hesitates to tighten its monetary policy, unlike its American counterpart, the Federal Reserve. In the meantime, the Bank of England surprised the markets with a sudden decision to tighten its monetary policy. This helped the pound-dollar pair to quickly recover from earlier lows and settle near the mark of 1.35. Besides, investors were encouraged by the fact that the UK government gave up its plans to impose restrictions, at least during the holiday season. As for the crypto market, traders preferred to stay cautious during holidays, but still Bitcoin lost 7.5% in the last trading week. On December 31, the quote developed a downward movement and depreciated to the level of $46,000 per token. It seems that the downtrend will remain in place in the near term. In the commodities market, oil gained 53% over the year. Thus, Brent crude rose to $79 per barrel, posting its biggest early gain since 2009. Oil demand was relatively stable throughout the year despite coronavirus outbreaks combined with the lockdowns and travel restrictions. On the supply side, the OPEC Plus has resisted calls from global economies to ramp up production and is expected to stick to its policy of a gradual monthly increase during the meeting on January 4. Actually, this decision was already confirmed on December 2. Gold closed the year with good prospects ahead, as investors traditionally view it as a hedge against inflation and a safe haven asset in times of difficult epidemiological situation in the world. And you have watched Currency and Commodity Market Review. We keep monitoring the financial market situation. Subscribe to our channel and keep abreast with us. We wish you profitable deals and see you in our next video.